We are in the final, let's say, quarter of the seminar, and we are going to have a book launch at the end of it. But before that, I'd like to invite all of the panelists back up so that we could have a quick Q&A and really answer the questions that the audience members looked forward to hearing answers to. The first question will be to Dr. Victoria. Yes. This is the question. Should Uganda build the oil refinery, and how will it recoup the investment, since at some point the issue of energy transition, or as you clearly put it, the energy progression, will impact it, and most likely negatively?
I mentioned in my presentation, it's important for African countries to utilize their fossil fuels. And in this respect, it's advisable to invest more in the infrastructure development. I believe, like I mentioned, we're expecting a boom in urbanization, industrialization, and population growth. So yes, Uganda should go ahead and build its oil refinery, because come 2040, countries in sub-Saharan Africa will still need more fossil fuels for economic development.
Thank you very much for that. The next question that I have will be for Ambassador Gaia. What has been the impact of shrinking oil prices and shrinking national budgets on infrastructure development and budget allocations in Africa?
I think that I have quickly already responded to that question. So I say major oil companies who have project of investment in Africa, but the project, when they decided to do it, remember the oil prices was about 50 to $60 American dollars per barrel. But now, because of the drop of oil, most of companies stopped their investment in African countries. So, and then I've already gave you some example. So we have the 9 biggest major oil companies. So they was about to invest $175 billion in African continent, but now they reduce it to $38 billion. And I think that the only one way to improve the investment in the African continent depend on the rise of the price of crude oil. Currently, it's about $35, and I'm not sure that these companies are about to invest their money right now. So we have to see when OPEC plus member countries, and when the lockdown or over the world will be finished, because you know that about 4 billion people in the world are on confinement. So once the confinement is not finished, is not end, so I'm not thinking that the investors should come back to African continents.
Thank you very much for that insight, Ambassador. The next question we have will be for Ms. Lopez. And the question is regarding Mozambique's gas reserves. And the question is phrased as follows. Will solar energy really have a leg to stand on within this energy transition, considering the fact that Mozambique has such large and cheap stranded gas reserves? And essentially, how will this energy transition and even COVID-19 impact the viability of solar energy in comparison to the already strong existing potential of gas in Mozambique?
Thank you. Actually, we have just developed and reached financial close of a 40 megawatt solar plant in Mukuba with very competitive prices. And we really think that solar will be very important for the energy transition, irrespectively of the gas reserves. Because remember that in my presentation, I mentioned that our rate of electrification is around 30%, and we have to achieve at least 64% in 2024. So I think a balance of the two sources will be possible, but I really do believe that the solar will peak in Mozambique, and also due to some international initiatives that are being developed with the help of some multilaterals and cooperation agencies. And we are preparing, the government of Mozambique is preparing auction for some sites to develop some solar projects that it's called Prolair, and it's sponsored by the French Cooperation Agency, and they are willing to launch the first pilot project within the next 2 or 3 months.
Thank you very much for that as well. Thank you very much. The next question we have will be directed towards Professor Peter Cameron. This is a big question. The question states, given the importance of potential contract renegotiations, due to the postponement of work programs and decreased investments and production volumes, can we expect that more extractives contracts will be published in full, including riders and amendments, to fuel the debate on local content, investments, social payments, and the split of cost and equity oil?
Thank you. I think my response to that would be that the two are not necessarily connected, that there has been a long-term trend towards contract transparency, towards the publication of contracts and related documents, that I think has to be seen as a healthy trend, but it's also, I think, one that's probably irreversible, that more and more people expect documents to be publicly available, and I get the impression that more companies are bought into this. Maybe they need a period of time in which confidentiality is obtained before they make them publicly available. But it may be that this virus impact accelerates an existing process. I don't think it's necessary that that's going to happen, but at the same time, if the person asking the question is keen to see more of the publication, I would say that they don't need to worry. There are quite a lot of people out there who are actively trying to make contracts publicly available and indeed accessible as well, assembling them on websites so that you can actually get to them. And it's a very, very helpful for those of us who study contracts. It's very helpful indeed to have these in the public domain. And given that they concern public goods, it's reasonable that people in the country should expect to see these available.
Thank you for that. I'm sure the person appreciates the answer greatly. The final question will be for Dr. Nakle. It relates to post-COVID-19, and the question is, post-COVID-19, what types of changes are we likely to see with regards to fiscal tools, whether it's taxes, royalties, or other fiscal instruments in countries and regimes? And if there aren't necessarily direct impacts in that, are the impacts a lot more non-fiscal, for example, health, safety, and operations, but just essentially mapping out the potential trends of how economies will recover post-COVID-19?
Yeah, it's a big question, but let me see if I can dissect it into several parts and highlight the most important aspects. First of all, really, I mean, economists are, they continue to come up with figures and estimates about how the recovery is going to look like. And some people say it's going to be like a V-shaped recovery, which means it's going to be very fast. Other people say it's going to be it's going to take a longer time. We say the U-shaped curve, others talk about W. So really there's a huge uncertainty, and every month as new data comes in, there seems to be a downward revisions of various forecasts from international organizations such as the IMF. So at the moment, it's quite difficult to predict when the post-COVID-19 recovery is going to take place, and not only when, but also how quickly is it going to be, we're going to go back to normality. That's going to be by end of 2020 or end of 2021, 22, really is still quite a hazy outlook, I would say. With respect to investment and oil companies and fiscal terms, here, interestingly, I say that's not all gloom and doom, because typically what we find is that when oil prices go down, we find the bargaining power shifts more towards the investor away from host governments. And because also of this longer term uncertainty because of climate change, we find investors placing greater emphasis on shorter or rapid payback periods. So they want the opportunity to recoup their initial investment quite quickly. And also they will have more opportunities than what they can fund. I mean, just look at the balance sheets and the financial results of the oil company for the first quarter of this year. It's going to be even worse for the second quarter of this year. You get an idea about how constrained finance is going to be for these companies. So post-COVID-19, I'm pretty sure these companies are going to have more opportunities than what they can fund. And then this is going to drive host governments around the world for tougher competition to attract and really seduce that capital to come to the country. And this is going to be, in my opinion, the biggest motivator for governments to revisit their fiscal terms. Because governments, for example, that have quite high fiscal take, but most importantly, quite regressive fiscal regime, which puts a lot of the burden right up front. For example, not only with high royalty rates, but on top of that, for example, very meager cost recovery ceiling. And then on top of that, signature bonus. I think these are going to be a bit of the past, the signature bonus, the generous signature bonus. So I think we're going to see many fiscal terms around the world revised, more in favor of the oil companies. And also maybe we're going to see a shift from upfront heavy loaded instruments to more profit-based instruments, because already, interestingly, these trends did not emerge because of COVID-19. That's something very important to remember. Many of these trends started before the pandemic, and the pandemic amplified them. And that's exactly what we were seeing with the fiscal terms around the world. Nigeria was thinking about revising its fiscal terms. Angola already introduced some relaxation of the terms. The debate is ongoing in other countries in the region and elsewhere. So this is the kind of trend I'm expecting, starting actually from now, and will increase post-COVID-19.
Thank you so much for that answer. Very, very well addressed. I'd like to thank all of the panelists that have eloquently, or all of you have very eloquently handled the questions that the audience members have had.